FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is April 13th, 2020. You're going to be listening to this probably the 14th. It's noontime. And, well, just when you thought that gold was finding a level, it wasn't going to go any higher, you were wrong. And right now, gold has broken through the $1,700 per ounce mark. It's up $22 the ounce to $17.0760 on the bid. What does that mean? Silver, of course, is down 7 cents. You're going to hear about my theory on when silver is going to break out, and it's going to be sooner rather than later. In the meantime, what's your opinion? When do you think silver is breaking out, and how high do you think it will go? We'd love to hear your opinion. Why don't you send us an email at kl@kerrylutz.com, kl@kerrylutz.com. Also, if you got any questions for John Rubino, please send it. John, so it's happy Monday. Gold is moving right according to plan here, isn't it?
Hey, Kerry. Yeah, this is a very happy Monday for the gloom and doomers out there, and myself included, because stocks are down, gold is up. You know, that was supposed to happen every day for the last 5 years. And finally, it's starting to happen regularly. Gold, as you said, blew through 1,700 today, and it really isn't looking back. And which isn't that big of a surprise, given the fact that the mainstream media has started to discover the quirks now in the gold market. You saw a lot of stories for a while there about how you couldn't find gold and silver coins if you wanted to go to a dealer or order some online. You just couldn't get them. And if you did find them, the premiums were insanely high. And see, that's the kind of thing that a regular newspaper reporter can understand. There's a shortage of something. Well, the price is way up because of the shortage. So that's an easy thing to report. The deeper stuff about the nature of money and the machinations of the big banks in the gold market, that's way harder to research and report. So we don't see a lot of stuff like that yet, but the basic stuff that, you can't get this, is being reported out there. And, it's human nature that if you can't get something, you want it. Mm-hmm. And you start thinking about why you can't get it. And that in the gold market, that leads you to, debt is soaring. And back in 2008, this happened with gold. And in the 70s, this happened. People made a ton of money in this kind of a situation. So let me try and get, so that's what's happening in the gold market right now, where people are starting to educate themselves a bit. They're beginning at the point of, this thing is in shortage. Why is it in shortage? Without knowing much else. But then they're moving further into the story and finding that it's a really appealing story in this world. It's an asset that gives you financial safety at a time when safety is in really short supply out there. There are very few things you can own where you feel like your money is definitely not going to evaporate, and gold and silver are among the things that offer that over long periods of time, and people are starting to figure it out. So they're jumping into that market, which I guess brings us to real estate, right? Because your house used to be the thing.
Your house is your savings account.
Safe. Yeah,
right?
Yeah, it was the thing that was always going to be there. You could always live in your house, and it was going to go up in value because houses always do that. But now stories are starting to appear in the mainstream press about the real estate bloodbath that is coming as everyone gets laid off and people stop paying their rent, and cash flow just evaporates across the real estate complex. And this morning, Zero Hedge had a story about JP Morgan Chase and what they're doing in small business loans and in real estate. And it said that they had basically stopped making loans to small businesses except for the loans that are guaranteed by the government. In other words, those paycheck protection plan loans that are out there now. JP Morgan Chase will make those because the government is going to pay them off. if anything goes wrong. But they won't, if you're a small business, they will not lend you any money for anything else. And in the mortgage market, they've tightened their mortgage criteria dramatically. And they're doing it in anticipation of, this is a quote, the biggest wave of mortgage defaults in history. So JP Morgan Chase, the biggest, most influential bank out there, is basically petrified of what's happening in the mortgage market. So even with, mortgage payment forbearance, where you can go a year without paying your mortgage, and stuff like that, which normally would keep people in their houses for a really long time. It would take all the pressure off of you being a homeowner with a mortgage if you don't have to pay the mortgage payments. But a lot of other people could be forced to sell even so, even if you've got a house. But if that's your whole savings account, and you just got laid off from your job and you have no other money, the fact that you don't have to pay your mortgage may not be enough to keep you in your house. You still might have to sell. So buyers are pulling back because, how do you even research a house now? Or you can't go in and just wander around with a realtor and ask them questions anymore. On the one hand, so buying is much harder, and a lot of people are probably going to have to sell, and that equates to much lower prices going forward. So real estate is all of a sudden not a super safe place to be, which feeds back into the gold complex. If you want to have some part of your money in a place where you're reasonably sure it's going to be there when you go get it later, your house is no longer necessarily that place. And gold and silver, or gold in particular, since it's going up right now, looks like it might be that place. When one asset is the only thing that's going up in the whole world, all of a sudden it stands out like a supernova in a night sky where, everybody's eyes are drawn to this thing that is still doing well. And even if they don't know why it's doing well, they still want a piece of it because they assume that somebody knows why it's doing well and it's a legitimate reason. And so you get all kinds of money that never played around in precious metals moving in that direction. There's, momentum players and first-time buyers who have a little bit of money and don't know what to do with it. Lots of people like that. And so that's, I think, a big part of what's driving precious metals right now. And there really isn't any end in sight, given what the governments of the world are doing, because everybody's just now ramping up the biggest QE programs, the biggest asset purchase programs in history and the biggest fiscal deficit coronavirus relief programs that we've ever seen. We've never seen stuff like what is happening right now. Even in 2008, 2009, today's numbers dwarf those numbers. So, the stage is set for money flowing aggressively into safe haven assets.
Hey, and, this is reminiscent. JP Morgan's move here is very reminiscent of what they did in the repo market last year. They woke up one day and said, the repo market, probably not a real good place to be right now. We think we'll just pull out. And they just pulled out overnight, threw the market into turmoil. And then 6 months later, we see what happened here. They didn't know the coronavirus was coming, but they knew some type of financial pandemic was on its way, and they didn't want to be anywhere near it and leave the government to pick up the pieces. And that's what government's doing right now in the small business arena. They will be the only lender to small and medium-sized businesses. And unfortunately, because they don't have to care whether it gets repaid or not, they'll just throw money. And we're already seeing it with these PPP loans, Paycheck Protection Program loans. They're forgivable. You can get up to $10 million, depending how many employees you have. It'll pay you for 2.5 months of those employees' salaries, up to $8,333.33 per month. So 2 times that's roughly $20,000 an employee, and you add in a bunch of other stuff. I'm not going into it, but you see that they're going to forgive it. And then the SBA is making these economic injury disaster loans streamlined, no collateral necessary. And not only that, it's going to open the floodgates up for fraud. Do you think we're going to get hyperinflation from this, John?
Well, eventually, we're going to get some kind of a currency crisis. I mean, these numbers are pretty definite about that. But when and how this plays out is kind of an interesting intellectual challenge trying to figure it out. But, these small business loans, think about that from a bank standpoint. Normally, when you do a small business loan, you have to actually do credit research, right? You got to have one of your guys look into that business. And now they don't have to do that at all because the government is the ultimate borrower, and these little companies that they're lending to are just conduits. Right?
Right.
So you don't have to do any credit research. So you've got your whole credit research staff. You could lay them off if you want to in this market.
Yeah.
And just directly lend money to the government, at least in your own mind. That's what you're doing. And functionally, that's what you're doing. So whoever shows up who can prove, 2 or 3 different things, present 2 or 3 different pieces of paper to a bank, they get money.
Yeah.
And from a banker's standpoint, that's got to be kind of peaceful in a way. You actually don't have to do any of the stressful work that you normally do in your business. You just type in numbers and fill in a couple of blanks around the numbers and then hit send. And that's all you have to do. So you could call this the banker's peace of mind program, right? Because they're just making life easy for bankers again, right? That's what they always do in these bailouts. It one way or another always ends up being a bailout for Wall Street. Because now here, JP Morgan Chase is going to make guaranteed 1% returns on all their lending going forward, because they're just going to lend to government guaranteed borrowers. And 1% doesn't sound like much, but when you figure that it's leveraged money to begin with, so it's borrowed money at much less than 1%, and that it's a guaranteed return. So when you're talking hundreds and hundreds of billions of dollars of loans, it's serious money, for a bank that doesn't really have to think about what it's doing. They can just relax and do it. So, I want a job like that someday.
Yeah, someday you'll get one.
Yeah.
You'll see. You'll be the gold dealer at JP Morgan. Who the heck knows? But what we do know is that it can't go on like this, unsustainable. And the government can't be doing everything the way they are now. It's just not going to work out. One thing noticed, I looked in the MLS here in northern Palm Beach County, 20% of the properties have cut prices within the past week, or maybe it's 10 days. I don't know what that, how long it is, but 20% is a large number when they were basically just sitting firm, waiting for their price to come in just 2 months ago, John.
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Well, Carrie, you've seen that statistic. That was actually a popular statistic for a while, was the number of properties that sold for something above the asking price, right?
Yes.
And for a while there, it was a big number. It was like 35% of properties in this market sold for more than the asking price. I bet that's zero now, right? Because who is going to pay more than the asking price for anything right now, other than gold and silver coins? So in real estate, it's the opposite now. It's how big is the price cut from the and what is tough for homeowners or home sellers is that the past year's price setting was done at a bubble peak, right? It was the highest price ever for this property. That's where you were going to try to sell it for. And so you've got air pockets under the value of whatever you're trying to sell right now. And those air pockets go all the way back down to to the 2010 bottom, which is 40 or 50 or 60% less than today's prices. And that just takes you back to 2010, right? It's one decade back in time, which isn't that far. We were basically the same people walking around back then as we are now. So it's easy to envision asset prices falling back to the previous cycle's lows in this kind of a crisis. And with houses, you're talking big money now because those things went up so much. So in a lot of cases, so market forces would say we're going to have half off sales on a lot of houses. But market forces aren't the only things in play right now. So you don't know if the government is going to, at some point, just step in and start buying real estate. I mean, they're clearly going to step in and start buying equities at some point, but real estate would be the next on the list, right? And that changes everything. So maybe we shouldn't hold out for 2010 prices because the government might stop us at 2013 prices and start bidding everything up inside. So who knows? Yeah. But as you said, it can't go on, Kerry. And you are absolutely right. This can go on. All these games can go on as long as the currency holds its value. See, that's the end point in this process. We'll do these crazy things as long as we have highly valuable dollars with which to do them. But as soon as that starts to change, as soon as the dollar's value starts to fall, then it's over. Governments they have nothing left to do. All they have is easy money. And when easy money starts being a detriment rather than a benefit, because the value of the currency falls faster than whatever it is you do to improve the markets with your currency, it's over. And that is the end game. And that will happen. Basic supply and demand economics 101 says that at some point, currencies are affected by this. And what we're seeing in the gold market is the early version of that. Gold isn't a competing form of money. When it goes up, that's the same thing as saying the dollar is going down. So today and for the last few months, the dollar has been going down big time. And when that decline spreads to other assets, in other words, when the dollar starts going down versus other real assets, then it is totally game over for the system. And we might not be too far from that.
Well, I don't know when it's coming exactly, but if they keep doing what they're doing, it's bound to come. I don't see how it doesn't, really, John. I mean, this is just suicidal what they're doing to the currency, and something has to give. It's got to give. I don't know when. Like I said, I can't really predict the future, but this one, you don't need to be psychic to know what's going to happen here.
No, but you also can't predict the timing. Unfortunately, that would be the good kind of psychic powers to have, right? If you knew the date when something was going to happen, but then you'd be fine. And so even if you are reasonably sure that how the process is going to play out, that when it plays out thing is still a source of extreme stress, because if you place a bet on this whole, currency reset thing at the end of the process, you kind of need to be right within a year or two, right? If it's 5 years or 10 years from now, then you've basically locked yourself into a losing trade for maybe the rest of your investing life. So this is still not a stress-free thing, but it is something that's playing out in event according to the script. Just the timing is what we can't know.
Yeah, totally right. Well, I just remember Biederman. He was blogging for a while 10 years ago, and what he said about silver is the worst investment in the world, but one day you're going to wake up and it will be the best investment in the world. And, yeah, and I think that day is very close because, the gold to silver ratio hit 121 just lately here, when everything was crashing, including gold and silver. Gold went down more than gold, so the ratio of gold to silver went up. And not so long ago, a gold to silver ratio of 80 was considered an extreme high reading, which indicated that silver was going to outperform gold going forward. So now we hit a reading on that indicator that
is just literally off the old charts. So it's hard to believe that silver doesn't outperform gold going forward. It may be an irregular process still, but at some point there's this parabolic move of silver versus gold. Gold might still be going up, but silver will go up parabolically against gold, which means it'll be going straight up versus everything else. And that day is coming too. There will be a time when silver blows through its old $50 record high price and just keeps on going. So yeah, it will be the best thing to own. And I'm a lot more comfortable saying that that now is the time to grab a bunch of silver than I am saying that same thing about any other trade in this market. Maybe this is a great time to short stocks down to half the current price. I don't know. And maybe it's the time to put low ball offers in real estate. That's probably true, but I don't know that for sure. But silver feels like a sure thing. Yeah. Famous last words, but that's what it feels like.
Yeah, well, I'm inclined to agree with you. I think silver, it's not trading on the basis of investment demand right now. It's strictly trading on the basis of industrial demand, which obviously is down because the world economy is down. Will it go up later? Probably, because even when economies go down, what's happened in the past is the demand for silver has continued to go up, John. We've seen it. Every year, the demand for silver is up.
Well, silver is an industrial metal and a monetary metal, but the industrial side is definitely weak right now. But it's such a tiny market. There really isn't that much silver out there relative to stocks, bonds, real estate, and even gold, that a minuscule amount of the assets in those other asset classes flowing into silver would just swamp the drop in industrial demand. And investment demand could become 85% of the silver market without causing a blip in the markets where the capital is flowing from. So I think that will probably happen at some point, just because, there's a basic psychological thing that happens in precious metals when gold goes up. People decide they want to buy some gold, but then they look at what you get or what you have to pay for one gold coin. One thing about the size of an old 50-cent piece costs you $1,700 or $2,200 or whatever. And then you look at how much silver you get. You get this big box of silver for the same price. So everybody just jumps into silver, and that just swamps any other factor in that market. And we're heading for that point in the cycle. And that's not some, hope and pray kind of thing that ought to happen, but has never happened before. It's actually happened twice in silver's history, in our living memory, in the 1970s, and then more recently in the 2010 to 2011 timeframe, where you just couldn't get silver. Everybody wanted it. Prices were going up, and they went up to pretty close to $50 an ounce for silver in each case. For recent history to repeat in a market this crazy is not a whole lot to ask for.
Yeah, especially with imminent devaluation, debasement, or continuing, I should say, ongoing debasement of the currency. It makes you wonder why it hasn't happened already.
Well, see, that's the frustrating thing about this, because it really should have happened a long time ago. And what it means that it hasn't happened is that central bank printing presses, in other words, the ability to create unlimited amounts of money out of thin air, is an incredibly powerful tool for fooling people, which should make us cautious, because they still have those tools. And until the currency starts to fall in value and takes that power away from them, they can do all kinds of crazy things in these markets. So there's really, the fact that it should have happened already shouldn't embolden us. It should make us more cautious, because if it shouldn't have happened, but it did happen, maybe that whole thing could repeat again. Maybe the last few years could somehow be engineered, again, by central banks as far as precious metals go. You know what's happening on COMEX with gold right now? Yeah. They're changing the margin requirements to make gold futures contracts less attractive.
Of course.
Yeah, and that's a powerful tool too, because if you have to put X amount down to play in the futures market, and they say now you have to put 2X down, that makes it a lot less attractive. You got to be a lot more certain that you want to do what you're doing in the futures market if all of a sudden your risk has been doubled. So that's also something that is out there and that the establishment will totally do, and they'll do it as much as they can, until doing it causes more problems than it solves for them. And we're not at that point yet. So nothing is certain about any of this because we aren't dealing with actual markets anymore.
Correct.
These are at best quasi-markets and at worst just pure manipulation on the part of the world's governments. So history is only a partial guide. The fundamentals are in a lot of cases offset by the manipulations of these super powerful central banks. So we can't know for sure how this is going to play out. But I personally still feel optimistic as far as precious metals go, just because we are so deeply into absolute crazy in the financial markets right now that precious metals are just historically where you want to be when crazy is the dominant theme of the global financial system.
And it certainly is the dominant theme now. Nobody can say that this is sanity. What's happening here? This is pure market mayhem, madness, and where is it going to wind up? Well, we kind of have an idea. It's just a question of when. We've always said that. And when is getting a lot closer. And when right now is we have to go. But make sure you check out John's site, dollarcollapse.com. Sign up for his newsletter. Sign up for ours, financialsurvivalnetwork.com. While you're at it, send us an email. We really want to hear from you. The email address is kl@kerrylutz.com. That's kl@kerrylutz.com. I had some of your email that we were going to go over, but we'll do that next week. It'll still be relevant. Trust me on that. John, till next week, we will see you then.
See you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.